China's growth just hit a 4-year low. Good day, everyone. Welcome to the video of the day. China's economy just posted its slowest growth in over 3 years since the depth of its COVID lockdown. But here's the twist: exports are booming, it's domestic spending that's are falling apart. Two completely different stories in the same economy at the same time. Let's break down what's actually happening and what China's government is expected to do about it later this month. Let's start with it. So on July 16, China released its second quarter GDP data and it missed forecast. But the real story isn't the headline number. It's a huge gap between what's working and what isn't inside the world's second largest economy. So what's the headline number? China's economy grew 4.3% year on year in the April to June quarter, down sharply from 5% in the first quarter and below the 4.5% estimates by economists. It's the weakest quarterly growth since the fourth quarter of COVID year when China was still under strict COVID lockdowns. For the first half of this year, growth came in at 4.7%, technically still inside Beijing's official target range. But the range is itself the lowest growth target China has set since it started publishing these goals back in 1991, which tells you a lot about how policymakers were already bracing for a slow year. Now, the export boom, which was not expected by anybody. Here's the part that surprised a lot of analysts. Exports actually surged. They rose 17.6% in the first half of this year and an enormous 27% in June alone. By AI related technology, semiconductors, and strong global demand for Chinese electric vehicles. Industrial production also beat expectations and was growing at 5.3% in June. China's economy isn't just holding up, it's genuinely booming, riding the global AI infrastructure wave. So, what made the part of this growth, which is the domestic weak spot? Now, for the other half of the story, retail sales grew just 1% in June, the third straight month of weakness, even though the normally better forecast for an actual decline. Fixed asset investment fell in the first half, and property investment specifically collapsed. There's also a connection back to story we have covered before on this channel. China sharply cut its crude oil imports down to 41.3% year on year, largely due to high global oil prices driven by the Middle East conflict. So you have a genuinely split economy where one side export factories running hot, driven by AI demand, while Chinese households and the property market stay stuck in much deeper slowdown. So what is going to happen next? The meeting which is going to happen. This is where it gets forward looking. China's Communist Party holds a meeting in late July and markets are watching closely for the signs of fresh stimulus. Premier LQI has already called for stronger counter-cyclical measures in response to this data. Even economists expect Beijing to lean toward targeted fiscal stimulus and direct household support, accelerated growth supplement, and insurance. Also, they said that since inflation remains low, there is also a solid chance of People Bank of China cut rates within the quarter if officials decide the economy needs more support from the bank. The IMF, its own July 26 outlook, actually raised its full year China growth forecast slightly to 4.6%. What is the bigger picture you need to look? So China, in one sentence, is a two-speed economy where AI driven exports and manufacturing are thriving while consumer spending in real estate remains stuck in genuine slump, and the entire second half of this year now hangs on whether the meeting delivers real stimulus or just modest underwhelming measures later this month. So, to conclude, this is a story we will be able to follow in near time. The meeting is coming in the next couple of weeks, and whatever gets announced, there will be shaping whether China's growth establishes or keeps sliding to the rest of year. If this helped you understand what's really going on in India Chinese economy, hit the button of subscribe. Next video we are going to cover it everything. Make sure you like the video, share with your friends, family, colleagues too. Welcome to Money Brief. Let's grow together.